Nasdaq's been branching out into new products as they compete with NYSE Euronext in the race to become the biggest global exchange. CEO Robert Griefeld joins our Margaret Popper from the Sandler O'Neill Conference in Midtown with more. Margaret.
Thank you, Mark. Bob, I wanted to ask you about this over-the-counter derivatives push that you're making. You had mentioned in your presentation that you might enlist the help of brokers. What does that mean? Are you going to have brokers actually invest in shares, or how's it work?
That's certainly a possibility, but I think the important thing is the context. And we at Nasdaq have a unique viewpoint because we were formed from the over-the-counter market, and as we did that, we really had the opportunity to bring, I think, greater surety to the market as a whole, and dramatically increase the market. So I think when you look at the swap market, the interest rate swap market, the pie will get so large as the market becomes deep, liquid, and efficient.
Well, so does that mean that you don't need the brokers to
Oh, you always need the brokers. They're our valued customers. So the brokers, when you look at the Nasdaq market, are fundamental to our success. They will be fundamental to our success in the interest rate swap market.
Do you end up, though, with a potential conflict of interest here with these guys who get huge order flows, who know everything that's going on, also investing in the exchange? I mean, where do you draw the lines?
Well, when you look at Nasdaq, the brokers who existed in Nasdaq in 1971 had a different experience than the brokers who exist in Nasdaq in 2009. So it's completely different. The world changes. The pie gets so much larger. So as a broad statement, you say you make less money per transaction, but there's so many more transactions in a market that has essential characteristics to it.
How would you, if the brokers do invest, how would you create the clearing for the swap venture?
Well, we have the clearing. It's been approved by the CFTC. It's ready for operation at this point in time. We built the technology. We built the clearing fund. It's ready to go.
I wanted to talk to you about some comments that you made recently about the financial crisis and the impact on shareholder and company dynamics. You said that the pendulum has swung too far in the shareholder direction. What did you mean by that?
Well, I said I was concerned about it. One is we have to understand that the future of America is tied to our ability to take entrepreneurial risk. And we can never really try to legislate or govern risk out of the equation. So the board of directors and the management have to take risk, and they have to take the risk based upon their in-depth knowledge of the particular business situation. That is a knowledge the shareholders don't have, has to be delegated, voted by, delegated to the board and to the management team.
Okay, and when you talk about a systemic regulator, which you say you're in favor of, what does a systemic regulator do? Well,
the issue you have is the financial system has tremendous amount of innovation to it. And in the financial world, as a result of this innovation and the dynamic nature of it, you have risk factors that you don't know where they're going to be siloed in what type of organization. Somebody has to have the responsibility to stand outside of every silo and look at the entire system and say, okay, this activity, even though I haven't directly regulated it, has to be looked at and has to be brought under my control.
All right. Thank you, Bob Griefeld, for joining us. Bob Griefeld of the Nasdaq-OMX. Back to you, Mark.
Margaret, thanks.